This is Tommy. You guys also know me as Snorlax with Because Bitcoin. Today, I'm going to be breaking down how I trade trends. If you've ever been in crypto for a prolonged period of time, you recognize that this is an asset class that has a really strong ability to trend in either direction. Not just those super amazing gains that you hear about to the upside, but also these really aggressive, demoralizing trends to the downside at times as well. There's a lot of different ways you can trade trends at the end of the day. People will have really complicated systems based on indicators, based on, whatever they think is, potentially edge. But for me, I think you can't get too caught up in indicators or data like that. You have to understand why price is doing what it's doing, I think from a structural standpoint. And then I think contextual with momentum as well. To kind of elaborate what I mean by that, pulled up this chart right here. It's representative of the 2021 bull run within crypto. I think it gives a really clean idea of what you should look for in a trending market from a structural standpoint, and a contextual one as well, because that's a big part of this as well. You don't need indicators to derive edge from context. For example, we're starting by consolidating right around the 2017 all-time high. You break above that high, you're probably going to see a trending move. Price discovery, it's not like a rule, but it's typically what you see, especially when you have volume to support it. As you can see here, we got great volume here, but I don't want to let the volume distract you yet, because volume's a great tool on trends as well. But right, we have this breakout, 2017 all-time high. Contextually speaking, it's a big deal. You get no retest here, and then price begins to trend aggressively higher. We form our first higher high right here, and then form our first higher low right here, unless you count, this or this, right? We trend again, get another higher high, another higher low. But this is where I think things you can see things, visibly start to shift. We have the swing high right here. We do set a higher high, but it's more shallow than our previous higher highs have been, being put in. We haven't broken structure yet though. And you can see we put in one more higher high here, but this is the first sign of real weakness, in my opinion. Not quite a market structure break, but we have some candle closes below the previous low. It's typically not what you want to see of a really strong trend. We have this lower high then form, rejection off this daily FVG, and then price trends aggressively lower. So I do think, it's contextual, right? You have this really strong trend as we go higher. You can see visibly a drop off in momentum, even though we're printing higher highs. Should be a sign of caution, especially, when we break this low, technically. This lower high right here, that was the signal to absolutely get out if you hadn't, taken profit already. And the result is a very strong trend to the downside. But I just wanted to kind of highlight that, because people love to use these indicators. They have to use them to trade the trend, when in reality, structure, momentum, and context are really all you need to understand the baseline of trading a trend. But I wanted to highlight this because although I was just talking about indicators, one of the things that you can find on the TradingView indicators right here is the fixed range volume profile. I don't really view it as an indicator, to be honest. I view it more an assessment on volume. If you know what a value area is, what a volume profile is, just taking this one, for example, you have a value area high and a value area low right here. The value area and the volume profile represent where volume has been transacted as far as both buyers and sellers at every particular price point. The orange line you see right here is the point with the highest amount of volume transacted. It's called the point of control. And you can use these things very effectively to trade trends. And it's something that I've really added to my system over the last 5 or 6 months to great effect, honestly. Because when we're talking about context, I think the bottom that we put in for the FTX collapse is a really good example. From a contextual standpoint, you have, and I'm going to keep using that word because I think it's really important when you're trading trends or identifying, trend shifts. You have this huge dump, huge volume, sell volume, and then there's just crush and volatility. That in itself, beyond just the capitulatory aspect of FTX going down, isn't enough to say that that's a bottom. But when you see price start to curl back up like this, that's clearly a trend shift and, a signal that you should get on board. And you see something similar happen around this level here, right? In our low that we set in March. You have USDC FUD get resolved in this area. A lot of fear within the markets because of SVB collapse, some banking crisis issues as well. Then we start to trend aggressively higher when that is resolved. And, I outlined some of the trades that I took on this trend. And, it might look like these trades have, just really great risk reward to them. And that's because they do. You can absolutely trade a trend like this when you use fixed range volume profiles, because when a market's trending and you exit the value area, you would put your entry, if you're structuring a trade, you put your entry at the top, of this breakout, and then you put your stop loss at the point of control. And, for me, that's how I trade a lot of trends. Price momentum should begin to take it away from your entry, generally speaking. And what happens because you're in a trend is the point of control and the volume will begin to build strongly at the area where price is expected to continue trending. So what ended up happening is here we built a lot of volume at value area high. And when we broke out, I could put my stop incredibly close to my entry. That's exactly what I did on every single trend here when we broke out. I expected us to continue trending. I put my targets at areas where I thought liquidity would be sitting, like this high right here. I was targeting around, the previous yearly highs for my take profit. So obviously I'm not catching the full move, but I'm consistently catching a very large move. And you see the same thing here, right? Where we had a super tight invalidation. I could enter here and then I could take profit wherever I, deemed a worthy swing high. And I just kept taking advantage of that the entire trend. And then if you really want to get into more granular trades, I also use this as a way to take some shorts in here. So these fixed range volume profiles are very helpful as far as identifying the trend, or at least if you're not positioned, if you don't buy a ton of spot at the bottom, it can feel intimidating to get positioned. And I think that's what these fixed range volume profiles for me serve such a useful purpose in doing, because buying the bottom and selling the top are kind of, they're myths, I think. So you have to have a system that can allow you to consistently get on board with a trend in a market that does nothing but trend or go sideways. Actually, that's a very broad and general statement, but if you've been in crypto, I think you kind of understand what I'm saying. Markets tend to range 80% of the time and trend 20%, but in crypto, those trends are just absurdly aggressive. So you need to know how to get on board. And these volume profiles for me are a great edge, especially when even when you take away just everything, right? You just have structure. And I can interpret structure. We talked about context, but, having actual data to really let you know where buyers and sellers are, being active will just, give you an additional edge to that. As far as other indicators, I don't think you need any more indicators or to trade a trend effectively, but I do like using the RSI personally. If I had to use another indicator, I would probably like to use the RSI just because I feel like I can visualize, where momentum is very well. And the one thing I'll say about RSI is that overbought and oversold is almost kind of I view it as a meme, because overbought is, when people hear that, they think, oh, it's overbought, so we should mean revert, when no, that's not the case. Overbought just means very strong momentum to the upside, and vice versa for oversold momentum, just very strong momentum to the downside. But you get the largest moves on RSI when you get these momentum breakouts, or, over here, like a momentum breakdown. You can see these candles were the most explosive of the entire move. So, that's how I view RSI. Again, you don't really need indicators to trade a trend effectively, other than just understand structure and context and where buyers and sellers will transact within the trend. But moving averages for some people are very useful. I think for me, they help me visualize the trend. Moving averages are not support and resistance lines. I would never recommend anybody using them for those things. And there are people who use moving averages incredibly effectively, and they have a million moving averages on their chart. I can let them explain how to use moving averages more effectively. But for me, it's just about visualizing the trend And really this white and blue line for me are just some trend EMAs that help me contextualize momentum, the strength of the trend. And if when we get these little crossovers on them, if the trend is maybe about to reverse on a lower time frame. So they're just tools, indicators are. If you don't have a strong foundation of why price is going to be doing what it's doing and how prices move within crypto, it's going to be a little bit more difficult to trade a trend, or at the very least, you're going to be trading off of indicators that everybody else has. So I hope this video helps you a little bit with trading trends. At least that's how I have been trading them this year, and I've been trading them fairly effectively. So yeah, no, I hope you guys have a great day, and thanks for tuning in.